This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, February 13th, 2015. So the euro continues to remain supported above recent range lows at 12.65 and over the 11-year low from a couple of weeks back at 10.98. The market right now looks like it wants to continue this correction higher, but a break above 15.34 will be required to extend this correction and open the door for a measured move towards the 17.50 area. Ultimately, the downtrend remains firmly intact while below the 50-day moving average, and only back above this medium-term moving average would compromise the bearish outlook. At the same time, weekly technical studies are still tracking in oversold territory, and there is room for additional corrective activity above 15.34 and towards the 17.50 area. But inability to take out 15.34 or close above 15.34 on a daily close basis would keep the immediate pressure on the downside, with a lower top set out potentially at 15.34 or somewhere around there ahead of a more immediate retest of the 10.98 low, which guards against the psychological barrier at 110 further down. Sterling dollar. So cable has continued to extend gains following its break of recent range resistance at 52.70, and this extends the correction that we're seeing right now and opens the door for a move into the 54.85 to 155.90 area. Ultimately, here as well, the downtrend remains firmly intact, and a medium-term lower top should be sought out somewhere ahead of 156 in favor of a fresh downside extension back towards the 2015 low at 49.51. Ultimately, only back above the 58 area would compromise the current bearish outlook. Dollar yen. So dollar yen has recently broken above some triangle resistance, which could put the focus back on the 121.85 December 7-year high, but has recently broken back down to retest that previous triangle resistance, now turned support. Ultimately here, the market remains locked within a consolidation between the 121.85 7-year high and the low from December 16th at 115.55, and a break on either end will be required for clearer directional insight. But again, with the overall uptrend well intact and this market locked within a very well-defined uptrend, the bias continues to favor the market higher above 121.85 and towards the next measured move objective around 125 further up. Only back below 115.55 would delay but not negate the constructive outlook. Euro Swiss. So here's the Euro Swiss daily chart. We can see here that sharp, violent decline we saw a few weeks back, and the market has since been locked within a consolidation now between 106.45 above and 104.15 below. So a break on either end will be required for the next clear directional insight, but it looks as though the market is trying to break up above 106.45, which would then open the door for a move or the next upside extension towards, in this recovery, towards the 110 area. Inability to take out 106.45 with a break back below 104.15 would put the pressure back on the downside. Aussie dollar. So Aussie dollar remains locked within a well-defined downtrend, but is recently showing signs of consolidation or correction off the lows that we saw at 76.25 from February 3rd. A break below 76.25 would ultimately expose a deeper setback towards a measured move at 73.75, but we shouldn't rule out the possibility for the potential of a break above the recent range high at 78.76, which would open more of a correction up towards a measured move correction objective in the 81.25 area from where a lower top, a medium-term lower top, would ideally be sought out. Dollar CAD. So dollar CAD is still in the process of a consolidation off its recent multi-year high at 128, and we need to consider the possibility of this correction extending lower before the market heads higher. The uptrend is still very well intact, but if the market takes out recent support at 123.50, this could open a more significant downside correction into the 120 area before the market looks to carve out the next medium-term higher low ahead of a bullish continuation. But if the market can hold above the 123.50 area on a daily close basis and break back above 128, that will expose the next measured move upside extension towards the 2009 peak at 130.65. Kiwi dollar. So Kiwi has also been in the process of correcting and consolidating following its recent multi-year low at 71.76, and a lower top is ultimately sought out ahead of the next downside extension towards the 68.55 area. But a break above 74.95 would extend this correction further and potentially open a more significant upside correction towards the 78 area before the market once again looks to roll over in favor of the underlying downtrend. SPX 500. So the S&P 500 is in the process of retesting the record highs from late December at 2093, and it looks as though the market may want to take out this level and test psychological barriers at 2100. But a break and close above 2100 would be required to open the door for significant upside beyond 2100, while inability to do so will continue to keep this toppish outlook intact and the potential for reversal, with the market needing to break back down below key support now at 2041 to actually alleviate immediate topside pressure. But again, there is risk for a break to fresh record highs beyond 2100, and now we need to focus on whether the market closes above 2100 or whether it can hold below 2100 with the prospect of this material top carving out. Gold. So gold had recently been in a steep setback, steep declines all the way back down to the 1217 area ahead of this latest minor bounce. But this latest minor bounce could continue into a more significant recovery and the formation of a higher low, with the market looking like it wants to change structurally after recently breaking above some previous resistance at 1256. So look for the market to put in a higher low now ahead of a bullish continuation back towards the recent highs at 1307, above which exposes 1345 further up. Really, only back below the 1200 area and this rising trend line would compromise the newly adopted constructive outlook for gold. That's all for now.